Hi there, it's Sunday the 13th of November 2016, Remembrance Sunday. My name's Andy Rowe and this is trendfollower.co.uk. And in this video I'm going to have a look at my weekly asset allocation system with timing and see whether there's anything I need to do this week. But first of all, let's just do a quick disclaimer, of course, because I'm not a financial advisor. I just want to remind you that my videos are all about what I do, so they're not financial advice, so please don't take them in that spirit. Regard them simply as entertainment, so copy me at your own risk. So this is all about what I do. So the plan is that I divide my investment pot into five different slices. So I'm interested in investing in shares, I'm interested in investing in property, in gold, in commodities and in bonds. And what I do is decide whether I want to be in or out of the market. And what makes me decide to be in the market is when the price rises above a certain figure. And once it's above this line in the sand, I stay in the market until the price falls down below that line. And when it goes below the line, I sell the investment and turn it back into cash until such time as the price rises above the line. And the whole point is to try and avoid the catastrophic falls in price that can happen to any asset class, really at any stage. So it's really about spreading the risk around and trying to benefit from the ups and trying to avoid the downs. That's what it's all about. So a simple concept, but it's not always easy to do emotionally, to buy and sell when one gets the signal. That's always the challenge, as we'll see a little bit later. So I'm going to talk about shares first of all. So there's a fund that I follow to be exposed to shares. This fund has a variety of different shares in it, mainly from the UK, some European and North American shares. So it's reasonably well spread and it's been very well run. It's done very well. It's very popular, and as you can see from the graph, the price is well above the line here. This line is a weekly graph, so I look at the graph at the end of each week, at the weekend. That's why I'm doing the video today, and decide whether I want to be in or out of the market. Now the price closed on Friday above this green line, so that tells me I want to stay invested. It has fallen quite a lot this week. Fell a little bit the week before, had done very well before that. And you can see basically the graph goes from the bottom left to the top right, which is really how I want to see all of the graphs going, really, because that means something is going up in price, which is great if you own it. It's not great if you don't own it. So I'm going to stay invested in shares. Let's have a look at property. Now last week I had a signal to sell property. The price had closed below the green line, and that told me that sentiment had changed and that investors were not so keen on being invested in this property fund that I like to follow. And so I had a signal to sell my investment, which I did on Monday lunchtime. Now the fortunate thing for me was that during Monday morning the price rose somewhat, and in fact I think by the time I sell it the price was slightly above the green line, but sell it I did because I'd got a signal, and then the property market, or the price of this investment anyway, fell again during the week. So I sort of benefited from a little blip in the prices, and so I had a signal to go long this investment back here, sort of July, August, and when I got the signal to sell, so this is November, I had the investment for a couple of months, and so it was a loss-making investment. I think I lost 2% of the original investment. So actually, that's not bad. I mean, it depends what happens next, of course. If the price goes way down, I'll be very happy. If the price rises up again and moves on up, then I'll be a bit cheesed off, because it's been quite difficult with this property investment because it has exposure to both European and UK property, and there's been sort of mixed things going on. The UK property prices have been falling, but the European ones have been rising, but now they're falling, and hence the fall in the price of this investment trust last week. So I'm happy to be out of it, and so that portion of my investment is now in cash, and that's the whole point. So what I'm trying to steer clear of is a massive fall in the price of this property investment trust, and if that's happening I want to be in cash, not invested in the fund. Okay, let's have a look at gold. Now this has been very interesting this week. I use a slightly different calculation for the line in the sand. You can see earlier this year the price of gold went up above this line. This was a signal for me to buy, and buy I did. It did very well, and it's been falling for the past couple of months. In fact, it was doing well from a fall a few weeks ago. It did really well, but then this last week the price of gold fell quite a bit, which surprised me considering the result of the American election. So I'm very surprised to see gold so close to this line in the sand. Slightly disconcerted because I think, gosh, will it fall down below that line and cause me to liquidate my investment in the next week or two? I hope not. I hope it bounces back up and continues up. So that's what I would expect to happen. But you know, I'm not in the business of trying to predict the markets really. I'm in the business of trend following. So when we don't have trends, then you know this system tends to produce losses. It's nice to have clear trends up or down, but not to have sideways movement to the market chopping around. That makes it very difficult because then I get false signals to buy followed by a signal to sell, such as I've had in the property investment. So still in gold, so still invested because the price closed above this red line, but slightly nervous about what I'll see in a week's time. So we shall see. Okay, let's have a look at commodities, and the investment trust that I used for exposure to commodities is doing very nicely. In fact, this last week it reached an all-time high for this year. You can see where the commodity price started to turn back in the early part of 2016, and it's been doing very well. So about a 30% plus increase in value for me in my investment here. So very happy to be invested in this investment trust at the moment. So commodities seem to be doing very well. So staying invested there. Right, last slice of the pie is bonds. Now, I tend not to trade bonds because they tend to chop around their line in the sand rather too much, and that causes too much investment cost in terms of buying and selling. So I just have 3 different bond funds, one denominated in British pounds, one denominated in euros, and one denominated in US dollars, and I just remain invested in those funds and don't do anything with them at all. It just gives me exposure to bonds and spreads my risk amongst all of the asset classes. So nothing to do there at all. So what do I have to do this week? Well, nothing at all. The property investment has been liquidated this last week anyway, so that money's just sitting in cash in my trading account, and I'll just wait and watch the markets and see what happens next. So I haven't got to do anything this week. So thanks for watching. This is my website. If you haven't seen it, do please visit my website and find out more if you're interested. So hope you enjoyed that, and I'll do another video next week which I look forward to you seeing and giving me feedback on. So have a great week, and I'll see you next weekend. Yeah, bye for now.